Okay guys, today we're going to be taking a look at HBAR. Okay, we're going to be doing some technical analysis, sharing my thoughts and opinions as to where I think this price action could be going. So as I get into this, smash the like button if you're new, subscribe, and let's get into HBAR. So we're going to focus in on the initial kind of what's going on right now, and then we're going to zoom out to the slightly bigger macro piece. Now this is Hedera paired up with USDT. We're on the 1-day Binance chart here, and we've seen some interesting kind of structures appear in the last few days or so. Now one of the things I wanted to point out was how we end up with this kind of rather interesting structure over here on Hedera Hashgraph. Let's go ahead and zoom in on this to start with. Okay, we're going to focus right here. Now I want to measure the distances between the wick highs that we have on this side, the wick lows, and of course that next kind of movement here. Now this move obviously reaches about the 786, 702 Fibonacci areas before getting rejected. Now if I measure that distance right inside here as well, and we start kind of pushing this over to this side, what do we see? Well, we can see that the next set of candles are actually greater than 1 to 1. That tells us that we have a rather irregular pattern playing out in the Hedera Hashgraph chart, okay, one that isn't typically what you would expect to see. That means that instead of this being some kind of larger impulsive structure, it isn't. It's actually a more corrective pattern. Well, I would say that it has the potential to be a diagonal based pattern or a corrective based pattern. So what we're going to do is want to take that into consideration with what we saw afterwards. So if I start measuring that entire initial movement from the lows of the 7th of April all the way through to the 12th of May, and I know that seems like a long way ago, right? But it's really important to what is happening right now. But if I take those candlesticks and I take that measurement and I move it over to that swing low that we had over here on the 22nd of June, we can see that we pushed up higher than the 1.382. And we did that in a 5-wave fashion, basically meaning that we started trending to the upside. So how can we finish with a trend if we didn't start with a trend? That's quite an interesting question. Now, typically that can happen, but you can't really normally exceed 1.236. But in this case, we actually exceeded 1.382. So for Hedera, something else is actually going on. And I want to throw out the idea that maybe, just maybe, we're actually doing something a little bit special, a little bit different. And it's a much bigger diagonal-based pattern that could actually have bigger, profound impacts in the longer term, the bigger picture, specifically with things like the ETFs that could come much further down the line. So let's run the idea that maybe, just maybe, that this little move down at this beginning of kind of April of 2025 is actually a 3-wave pattern, or sorry, a 5-wave diagonal-based pattern built up of 3-wave structures, right? And in that particular case, we end up with a different idea. We end up with this kind of diagonal pattern playing out in a bigger, broader picture, right? So if this is the case, then actually what we've got going on would be that this is a wave 1, this is a wave 2, this is a wave 3, this is a wave 4, overlapping with wave 1 because that's allowed in the diagonals, and then we have a bigger push to the upside. Now, as you can kind of see, I've already scoped out down here a bit of a target where I expect the price action to go to finish off its most recent correction. So if I'm right about this, and we are inside this larger diagonal-based pattern, then actually the price action should be starting to heat up after this little correction towards 19 to 20 cents. Now, at the point of recording, we are talking about, HBAR being 24 cents, but I suspect we still have more to the downside to go. Just a retest of the 200 EMA, maybe a wick lower, no closed positions, and then I think a launch. A bit of a fake out right now, kind of grab liquidity, then go kind of situation. So why do I think this? Well, I think this because of the structure that I'm seeing is very much reminiscent of a WXYXZ. Basically, this retracement is a corrective one that allows us to have that last little push to the downside. It's not a 5-wave trend because we have overlap, right? But it's not a diagonal because it doesn't really meet a lot of those requirements outside of, your typical kind of things that you would expect to see. And it doesn't normally happen with a 5-wave move to the upside. So you can't have 5 waves usually nested next to each other in opposite directions. So this basically tells me that we have the 3-wave corrections. We kind of have the ABCs inside of the W, the Y, and I expect we're going to see another ABC inside the Z wave. So my idea is that we move down to move on up later. And this is actually a big wave 4, indicating that there's growth to the upside afterwards. So if I just take 20.408 cents as a kind of line in the sand for the low, then actually I would suggest that we're going to be looking for 33 to 39 cents on that next 5th wave move to the upside before we can actually then start to get into the real kind of meat of the structure. So let me draw this out to help you understand what I'm kind of mentally picturing in my head. So over here we have a 5-wave pattern that is a contracting diagonal. Okay, and in that kind of world of contracting diagonal, we end up with this wave 1 situation, a wave 2 coming down, a wave 3 up here not exceeding that of a 1.618, but is greater than 1.236 on the fib scales. Lots of numbers, I know. We have this retracement that causes overlap with wave 1, which is allowed in diagonal based patterns, and then we have this push to the upside, reaching 33 to 39 cents. Now, is it possible that there's something else going on here? Yes, that's absolutely very possible that that is absolute nonsense and there's something a little bit maybe not as hopium, not as bullish as that, right? Because this would basically be putting us right back into those 2024 highs, right? So it's possible that actually this is just pure hopium and it is not actually what is going on. It's also very much equal parts that this could be just an overextended ABC structure, A, B, and C, and it's just irregular. It just pushed a little bit higher than a typical 1.236. But there's a low probability that that is the case. And that's because, you know, Elliott Wave does just track basic rules and the rules are the rules. And if I follow the rules, well, I end up with this kind of situation where the wave 1 is a little bit irregular, but ultimately the wave 3 makes sense. And the wave 4 also makes sense, and the push to the upside also makes sense. So the only part of this that I'm a little bit kind of not 100% on is the wave 1 starting position. That in account is a little bit off. I don't like it. And I have to kind of really focus in on that lower side to try to make something fit, as in it's a contracting diagonal because of that wave 1. But it would be a bit strange, right? Because even then, wave 1 would be, and would normally be anyway, larger and more normal and pronounced. So I don't like the wave 1 structure, but I can't really see any other way that this is playing out, unless, of course, we're in some kind of super, super bearish long-term play, and it is just an irregular ABC to the upside, and we just have further decline to go. I suspect that's not the case, but, you know, we have to throw it out there as a possible situation. Anyway, I'm going to leave on that yellow box target to the upside and that yellow box area to the low side. Our accumulative range has always been 12 to 18 cents for a while. We took advantage of that quite a bit, and I'm now looking at this as the next kind of big run to the upside. If I zoom out further and far enough, you can see I have a 1.618 target line, that white line on the chart up here, kind of 58.39 cents. Okay, so at 58.39 cents, we hit an impulsive trigger point. And I see everything that's going on here as a bigger kind of play for Hedera Hashgraph. We bottomed out over here in December of 2022 at 3.5 cents, guys. 3.5 cents, right? That was our low. And we saw this thing rally pretty hard in 2024. So if we were to kind of think about where we have been so far, we are talking about, if I can get this to snap on, 1,027% move to the upside. It's been pretty phenomenal, right? It's been a great run, but I guess perspective is absolutely everything, right? Because if we zoom out far enough, well, we can see what happened in 2020 and 2021. And that particular run to the upside was something rather special. Let's go ahead and snap these on to these key areas right here and here, and you can see just how special that was. 6,201%. And if Elliott Wave has taught me anything over the years, it's that this particular structured pattern, if we are able to hit 1.618 in a diagonal, which is what I think we are tracking longer term. So let me just show you what I think. This here could be your wave 1 in the kind of 3-wave structures that are kind of built up of lots of little mini trends. And then we have the wave 2. This is not a wave 3 necessarily because it's 5 waves. We have to have another 5-wave move to the upside, which then basically gets us into the wave 3, breaching 1.618 at 58 cents. A wave 4 coming down, which can be quite aggressive, could be another bear market before having another push, or it could just be a bit of a pause before we rally, but it should be pronounced nonetheless. And then we have that final push to the upside. Long-term target ranges, and I talk long-term multi-year targets, $2.16, right? So if we think about the growth that we would have seen from 3.5 cents all the way up here, we're going to mirror that kind of 6,200% growth that we saw from 2020 to 2021. And all in all, what happens is you wrap that up as a big corrective pattern that played out over multiple years. So the question is, would you mind $2 HBAR? I don't think I would mind that at all. Now you can let me know in the comments down below. Do you think that I'm just smoking way too much hopium pipe, or is this something that could play out? What's your price targets? Let me know in the comments down below, or join us in the free Discord server. But for now, I think all eyes need to be on 58.39 cents.